Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs of the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hey, everybody. It's Andrew Schiff here. Peter will probably be joining us in just a few minutes. As you may imagine, this was a pretty busy day for him. If you hadn't heard, the big news was that Chris Dodd, the Democratic senator from Connecticut, who Peter hopes to replace, stepped down today. Didn't step down, but he's not seeking re-election. I had a press conference in his home in Connecticut saying he wouldn't seek re-election after 4 terms in the Senate. So that's very big news, of course. The press was all over it. The reason why Peter is late for this show, he's just about to be home soon, is because he was taping a Larry Kudlow episode in which all 3 of the remaining Republican candidates were on the show, in addition to the new Democratic candidate who everybody thought would be the replacement for for Dodd, and who actually is a replacement for Dodd, the Attorney General of Connecticut named Richard Blumenthal, who's actually a pretty formidable candidate, much harder mark than Dodd was, who just had abysmal numbers. So it makes it more difficult for the Republicans, but, there's no separation ideologically between Dodd and Blumenthal. Blumenthal is a lifelong Democrat. He's got certainly no strong ideas with respect to economics, and hopefully Peter can make this about a campaign of ideas rather than just who's the squeakiest and cleanest politician out there. Anyway, so you can imagine it was a huge day. Peter did interviews on television stations and a couple of TV stations in Connecticut, a number of print interviews, wire stories interviews. It's pretty big, and hopefully it'll start the race in earnest now that we know who our opponent is. Anyway, Peter will be on the air in a few minutes to talk about that. I just would like to talk about some other things in the minutes that I have, which is basically that it's been a kind of a turnaround week in the markets. I think it started out on Sunday when Bernanke got up there at in Atlanta at the economic conference and made what was probably the most controversial speech of his tenure, and it's really hard to find anybody anywhere that would really give him a slap on the back and say, "Good job, Ben. You really told it the way it was." Basically, Bernanke, if you didn't see the speech, said that the Federal Reserve interest rate policies, specifically keeping interest rates so low for so long during the middle years of this decade, did not play into the housing bubble, did not create asset bubbles, and really had nothing to do with leading us into the current situation that we're in now. And therefore, it's not our fault. Well, he wasn't chairman at the time, but he certainly was a Fed board member at the time, and he was certainly an architect of a lot of the policies. Look, it wasn't our fault. We kept interest rates a little low, but perhaps, but more likely, the problems were the fact that the private sector got crazy and they invented all these weird mortgage products that were risky. They weren't regulated. There was a speculative mania among investors that went unchecked, and the private sector did it, and we were recalcitrant, or we were remiss for not regulating them as much as we should have. But reelect me as Fed chairman, and I won't make that mistake again. I will regulate more thoroughly. Obviously, this comes at a time when the Federal Reserve itself is looking to get more power as part of the. There are some disagreements in the financial services reform bill, and by the way, now that Chris Dodd is resigning, he's the chairman of the House Banking Committee. That kind of throws it into a little bit of a flux as to what kind of bill is going to come out of the Senate. But certainly one of the biggest issues is how much power to give or take away from the Federal Reserve. So it's certainly the speech that Bernanke gave should be considered to be more of a political speech than an academic speech. It's funny, I'll get to the academics in a second, but he certainly was part of a power grab. He wanted to give himself cover and let people know that they should trust him with more power. Of course, we went on the offensive right away with this after this speech on Sunday. We went on Monday was our offensive. It was just the most ridiculous thing. I mean, he's basically saying that low interest rates had nothing to do with it. It was all these crazy products. But, of course, he failed to mention that none of those products would have been possible, and none of that speculative mania would have been there if it wasn't for the fact that the interest rates themselves are low, or way too low. And the analogy that we like to use is, and I think Peter did mention this to a couple of reporters this week, is you're saying you're going to a senior prom, and you say, look, I'm going to pour a lot of liquor into the punch bowl, as much as I possibly can. But I'm going to make sure that's going to have nothing to do with any kind of hanky-panky or any kind of out-of-control party that results. What we're going to have is you need really good chaperones, really strict chaperones. We're going to supervise and make sure things don't get out of control, and that's what keeps things on an even keel. Well, our response is if you don't want the party to get crazy and you don't want the prom members, to get a little bit irresponsible, maybe don't spike the punch bowl in the first place. And the low interest rates are the spiked punch bowl. So it's a ridiculous argument to make. In fact, one of the key supports that Bernanke mentioned as to why low interest rates didn't cause the housing bubble. And believe me, if you're going to try to make that argument, you've got to pull everything out of the book. I mean, that's like trying to argue that there's no such thing as gravity, or you're trying to argue the world is flat. You better have some really convoluted and fancy formulae to put on the blackboard if you're going to try to convince someone of that. And he did. And if you look at his speech, it's filled with all kinds of mumbo jumbo that anybody without a PhD would have a real hard time to get through. But basically, he seemed to hang his hat on what was involved in a certain formula called the Taylor rule, which had to do with how low interest rates must be in a certain economic environment to create asset bubbles. And he went through the whole thing. He said, according to the Taylor rule, the interest rates that we had at the time should not have caused these bubbles. But on the same show that Peter's on today, the Larry Kudlow show, Taylor, the actual academic, came on the show and said, that's not what my rule meant at all. Ben Bernanke got it all wrong. Anyway, so I think Peter is on the phone now. Is Peter, are you there? Is Peter talking? Okay, he's not talking yet. Just let me know when he is. So, I mean, it was pretty funny, and obviously Bernanke's getting a lot of heat from all circles, and people know that there's really nothing to his speech, and I think the credibility came down a notch or two. So anyway, based upon, and the other big news today was the Fed minutes from December. When the Federal Reserve made its last rate decision meeting in December, they wait about 4 or 5 weeks and they release the minutes. So those came out today, and you get a look into what they were thinking. And the bottom line was that most members of the Federal Reserve are planning to keep their lending and their expansive monetary policies going for some time. I mean, people are talking about exit strategy. When's the exit strategy going to start? People soon assume that with the economy apparently stabilizing, and now people getting a little bit more interested in a recovery plan or reining in excess liquidity, that there's going to be an exit strategy. Well, there's certainly no evidence of an exit strategy in the minutes. The vast majority of the sentiment was that we got to keep buying, we got to keep expanding because the economy is very, very fragile. And if we take out our stimulus too quickly, we might have deflation, which of course is their favorite part of the boat. There's Peter.
Well, why don't you finish your thought and then I'll take over.
Well, okay, I was just saying how in some of the Federal Reserve minutes released today, no evidence of them shifting over to an exit strategy. So as a result of that, you saw the dollar, which had rallied probably about 7 or 8%. Not quite that much, 5% over the past month or so, has turned around and had a pretty big sell-off today. And gold
didn't rally 5%.
Well, it went from 74 to 78. What's that? 4.5%. Maybe 5. So, but anyway, we quibble. Gold had a big day today, up $20, and it looked like the pullback that gold had, which sent it from 1,200 down to about 1060 or so, might be in the rearview mirror. So I think the fact that people really saw the truth, which is that don't believe the hype. The Fed's in this for the long term in terms of real serious stimulation for as long as I can see. I think we're back to business as usual that we were seeing, a few months ago. And certainly the stocks and the positions that we have at Your Pacific Capital are responding that way, and we're having great days in all of our stocks. Anyway, with that, I'll turn it over to Peter.
All right, thanks, Andy.
Peter, how you doing? No problem.
Okay.
I'll hang up now. Hopefully he's on the phone.
Anyway, before I get to the calls, I'll speak a little bit, just even follow up on what Andy was talking about, these Fed minutes. Bernanke is basically saying that the Fed's not worried about inflation. Of course they're not worried about it. I mean, they want inflation. That's the card. That's their get-out-of-jail-free card, at least from their perspective. They think inflation is the salvation, that if they can just print enough money, that they can make these problems disappear under a pile of paper. And it's not going to happen. And I think people around the world are understanding. But I recorded a video blog in response to Ben Bernanke's ridiculous contention that that lower interest rates were not a factor in the housing bubble. The crazy thing was he said it wasn't low interest rates. It was the fact that so many people were using ARMs. Well, why does he think so many people were using ARMs? Because interest rates were so low. That's the only reason they became so popular. Same thing with interest-only mortgages. The interest-only payments were low because the interest rates were low. I mean, how could the guy say that we had a housing bubble because of mortgage products that only existed because of low interest rates, and then claim that no low interest rates had nothing to do with it? It's just not even believable. So I don't see how he's that incompetent. So he's just a liar, and I think people are realizing that. The dollar, I think, is back on a downward path. It hasn't really started to fall more precipitously yet, but I think it will. Some of the commodity currencies have been particularly strong. Gold to get up $20. Oil was up about $1.50 a barrel, I think, today. $1.80. It closed at $83.30. This is the highest we've closed in over a year, I believe, in crude oil. I think the next stop is around $90. I think we can get there very quickly. And ultimately, I think we're going much higher than $100 a barrel this year, and certainly higher energy prices are simply going to compound the problem for the unemployed, who are going to, have diminished capacity without jobs to pay for the energy that they're going to need. Food prices, of course, are also going to go up. I mean, all of this is the result of the stimulus, of the money that the government is creating, and people assume that because there's been a little bit of a pickup in the numbers coming out of Washington, that the economy is improving, that there's some kind of recovery underway. No, we still haven't recovered from anything. We're still drinking the booze. We haven't sobered up yet. We have to do that, but nobody wants to allow that to happen. Nobody wants to allow the market to restore a balance to this economy that has been so badly compromised by the distortive government policies. Another thing that there was a lot of in the news recently had to do with the government modification programs for mortgages, talking about the fact that so much money has now been spent on these modifications, and that it's been a complete failure. I mean, who didn't know that was going to happen? We just wasted a lot of money. Now there's a debate going that, well, we really need to modify the principal, not just make the payments low, which is something I said all along. If somebody has a $400,000 mortgage on a $300,000 house, if they're not going to struggle to make the payments, even if you lower them, because they're $100,000 underwater. When there's plenty of cheap rental houses around, why bother? So the only way to really keep people in these houses is to let them have equity in the house. You got to reduce the principal. But the people who are advocating this, number one, they want the government to mandate it. That's the last thing you want. If there is going to be, they have to be voluntary. There has to be no government coercion, and it has to be something that the mortgage lender decides that he wants to do because he thinks that's his best option. He thinks it's better to write down the mortgage for the current occupant of the home. That's a better strategy than to foreclose. Because when you foreclose and sell, you're still going to take a loss. So the question is, what makes the most sense? But we can't mandate it. Otherwise, you create a huge moral hazard. You create a big incentive for people to try to qualify for this program. After all, they get their mortgage reduced dramatically. But now there's also people that think that this solution is better than foreclosure because somehow it's going to prevent real estate prices from falling. They think, look, if we foreclose on all these houses and sell them, then the prices are going to go down. So if we can modify the mortgages by reducing the principal, then they won't have to sell them, and so the prices won't go down, and that's nonsense. If you modify a mortgage, let's say a guy's got a $400,000 mortgage on a $300,000 house. If you knock $150,000 off the mortgage so that now he only owes $250,000 and now he has $50,000 in equity, yes, he has an incentive now to make the payments if he can because he's got a $50,000 asset that he's going to protect. But the reality is the minute you lower the mortgage back down to $250,000, he can put his house on the market for sale for $300,000 and walk away with a $50,000 profit. And if he needs the money, that's what he's going to do. I mean, the minute you reduce the mortgages, right now that guy who has that $400,000 mortgage, he can't put his house on the market for $300,000 because there's nothing in it for him. He owes $400,000. But the minute you make his mortgage $250,000, now he can drop the price. And so what you're doing is you're bringing all these houses onto the market regardless. Even if there's no foreclosures, the minute you modify that mortgage to allow equity in that property, you free up that property to come up for sale. And of course, even if the owner doesn't sell the property, the minute he's got $50,000 in equity, he might be right at the bank for the home equity loan. And he'll start borrowing against that $50,000 until he's right back in the same predicament he was in the first place, ready to default again on a bigger mortgage. The reality is there is no government solution to the housing problem. The government created the problem. It was government policy. It was Fannie and Freddie. It was the Fed. And the government isn't going to solve it. And they're certainly not going to solve it by doing exactly what they did to create it. Right? That's not the solution. We need the market-based solutions, but unfortunately the politicians don't have the stomach for them because for some people the consequences are not good. Also another bill that I saw from the IRS I thought it'd be worth commenting on, that they want to now regulate or register tax preparers. They want everybody to have to get a license, a federal license, to take a test, to pay a fee, to go through continuing education, to prepare taxes. Now, this is the wrong thing to do. This is going to put a lot of very small tax preparers out of business. There are a lot of people who do it in their spare time, in tax season. Maybe they do taxes for 10 or 20 people. Licensing requirements, all this, it might put them out of business. It's certainly going to raise the cost to these preparers, so they're going to have to raise their fees. The bill is certainly backed by H&R Block. They know that they've got the ability to license up all their guys, and it'll cut back on their competition, which will allow them to charge more for their services. This is very unfriendly to the consumer. Cost the IRS is saying, "Oh no, we're doing this, for the taxpayer." Oh, they don't care about the taxpayer. Basically, what they're saying is, people are taking their money to these professional preparers, and they're making mistakes, that they're not trained well enough. They don't understand all the tax law. Well, the problem is the tax law is so complicated, nobody can understand it. This proves it. The fact that people that do it for a living don't understand it, how does the IRS expect the average American to understand the tax code if even the professionals, according to the IRS, don't know enough to do it? I mean, the thing needs to be simplified. Instead of trying to help Americans seek out expensive tax advice to try to figure out an overly complicated tax code, why don't we simply repeal the income tax or reform it, go to a flat tax or something simple, so that so many Americans don't have to seek out professional help to do their taxes. They can do them themselves. Anyway, just want to talk a little, the markets, overseas markets continue to be extremely strong. It surprises me again each day when you look at some of the positions, the amount of movement that we're seeing in these foreign stocks. Just even an example, I've talked about the China fund that we have, Euro-Pacific China Fund. That fund's only been around since August. So it's been around for 4 months, right? and it came out at $10 a share. It closed at $12.77. So it's up 28% in 4 months. And remember, I came out with this fund after the Chinese market already had a huge run. I mean, it had a big move up. I remember some people were making fun of me. They were saying, oh, Peter Schiff is now, this is the top of the market. We had this big run up in Chinese stocks, and now he's launched this fund. I mean, I tried to launch it a year earlier, but that's how long all the red tape took to get it approved. But by the time we did launch it, the market had gone up. But look, here it is 4 months, and it's almost up another 30%. It shows you what's going on around the world. Also, there's a lot of strength in the commodity stocks, the agriculture stocks, the energy stocks, the metal and mining stocks. That shows you that inflation is here. Ben Bernanke may not be worried about it, but you better worry about it. Every American citizen better worry about it. If you have funds to invest, you better do something to protect yourself. You need to get out of U.S. dollars, get into gold, get into commodities or foreign currencies. And unfortunately, if you're just an average American working for a living without any investment capital, there's very little you can do. I mean, your wages are going to get debased. The cost of living is going to go up, and you're going to feel this economic crisis more and more severely as the inflation continues to funnel its way through the price structures. And eventually, the Federal Reserve is going to be in this box where we call Ben Bernanke's bluff, where it's going to be obvious that monetary policy is too loose and that he needs to raise interest rates, that he needs to sell treasuries and sell mortgage-backed securities and not buy any more. Excuse me. And will he have the guts to do it? I don't think so, because if he had the guts, he would already have done it. Because the longer he waits, the more dire the consequences of doing the right thing. Oh, anyway, one more thing before I go to the phones. I got to talk about the Senate race. Obviously, the big news today is that my potential opponent, Chris Dodd, has taken himself out of the race. There's been this big call to dump Dodd. And, well, he's been dumped. So for those of you who have wanted Dodd out of the U.S. Senate, congratulations. He'll be out. The problem is he's going to be in for at least another year, and during that time he can do a lot of damage to the U.S. economy. But my desire to run against Chris Dodd is not simply a desire to get rid of one corrupt politician. It's his ideology, it's his policies, it's everything he stands for that I'm running against. And they've got Richard Blumenthal, who's gonna fill that void and step up, and he's obviously much more popular in the state of Connecticut than Chris Dodd, and so he starts at a higher level. But I think once we peel back the curtain, we'll reveal a politician very similar to Dodd and his ideology and his philosophy. This man is again a professional politician. He's been a district attorney or not district attorney, attorney general for 20 years. And prior to that, he was a prosecutor, and he's never run a business. He's never had any employees, so he's made a name for himself, basically going after businesses, trying to sue businesses, and so that's not what we need. I mean, business is already in trouble. We need somebody that's going to champion business, champion entrepreneurship, champion free market capitalism, not try to run up everybody's legal bills. I mean, we already have. We already need a lot of tort reform in this country, and obviously sending another lawyer to the U.S. Senate is not going to be a step in the right direction. These guys, there's a lot of lawyers there, and they tend to protect each other. They tend to protect their legal fees and the profits being made in the legal profession. And unfortunately, most of those profits come at the expense of productivity. We have much too much litigation going on. And so we don't need another lawyer politician to perpetuate those problems. We need somebody in there that understands how government has contributed to the problems confronting the economy, and how only an absence of government and a reliance on market forces is going to bring them back. So, I know that it does make the race a little bit more difficult. It's no longer a shoe-in for whoever gets the Republican nomination. It's going to be a horse race, but I'm in the race. I do think it makes it a little bit better for me in the primary. I think it takes the focus off of Chris Dodd and puts it on the issues more. And I think that's where I'm strong, is on the issues and on my understanding of the economy and on my record. And I think my opponents don't have that type of record. So I think when the race focuses more on what Chris Dodd stood for and not Chris Dodd the man, I think that works to my benefit. Anyway, let me quickly go to the telephone calls. People have been waiting on hold patiently. First up is Anrin in Michigan.
Hello?
Hi, you're on the air.
Hi, how are you, Peter?
I got a cold or something. I'm taking antibiotics and I'm coughing a lot, so it's probably why I don't sound right.
Well, Chris Dodd retiring is probably good medicine. So, but I have a question for you, Peter. The Wall Street Journal published an article about the U.S. International Trade Commission ruling in favor of U.S. steelmakers against the Chinese steel industry. And they approved a tariff between 10% and 16% on future imports of Chinese steel pipes used to extract natural gas and oil. Also, early last year, the Obama administration approved anti-dumping duties to the tune of 35% on consumer tires from China. My first question is, in light of our massive bailing out of the financial sector, why doesn't China impose tariffs on us for selling them subsidized financials? Additionally,
they should just stop buying those things.
Well, yeah. But I mean, don't you think it's ironic that we are imposing tariffs on them for subsidies when we have sold them the biggest subsidies of all time?
Well, they're subsidizing our economy by purchasing all the paper that we're selling them, and they're gonna figure this out, that they're buying a bill of goods. But these tariffs, these aren't tariffs on the Chinese. The Chinese don't pay these tariffs. It's American. If they're going to increase the cost of tires, all they're doing is making Americans pay more for the tires they're buying. It's not affecting the Chinese. It's affecting Americans. We're shooting ourselves in the foot. If we're going to increase the cost of importing the steel that's used in oil drilling, we're simply going to make American oil drilling more expensive, which is going to run up the cost of energy for American consumers. These tariffs don't hurt the Chinese. They hurt Americans.
I also have another question. It deals also with tariffs. As a Senate candidate, how do you feel about our economic policies towards countries like Iran and Cuba? Would you support ending our embargoes on these countries, or do you think that some economic sanctions are necessary for national interest?
Well, I think in some circumstances, to the extent of terrorism, as far as Cuba, we've had an economic embargo on Cuba for a long time. Meanwhile, Cuba trades freely with many other countries, including our neighbor to the north in Canada. So I don't really know what the American embargo of Cuba is accomplishing, because nobody else has that embargo but us. And so I don't know that it makes sense, but certainly in certain strategic areas, as a means, rather than military intervention, if we can use economic sanctions to try to, correct a behavior that we find to be anti the American interest. I mean, there might be circumstances where I would support it as an alternative to a military intervention.
All right, thank you. And
Sure.
I wish you the best of luck in your Senate race.
Yeah, thanks for your call. Next up is Joe in North Carolina.
Hi, Peter.
Hey, Joe.
Hey, my question is, I have a 401k at my job, and they match up to 6% of what I put into it, which is, a hefty amount, dollar for dollar. What incentive would I have to not take advantage of that and to invest abroad, perhaps with your company?
Well, I'm not following your question. If you take advantage of your employer's plan, you probably can't do that with my company. You probably have to invest within the plan that they're matching, right?
Well, no. What I'm saying is, instead of taking my dollars that I earn from them and putting it into the 401k that they host at the company, instead of doing that, why would I take those dollars instead and put them with you?
Well, what choices, assuming you put money into their 401k and they match it, right, what are your investment options? What can you do with the money?
What do you mean? Well, of course, it's a 401k, so I have to leave it with them, or take the
Right, but
penalty.
where is the money going? I mean, is it something where you individually select mutual funds in that 401k, or My point is, where is your money going to be invested in that 401k?
It's invested by money managers, in the U.S. It's U.S. stocks and stuff like that. It's not bonds.
Yeah, I mean, I don't know. I mean, my guess would be, you'd probably be better off investing abroad, even though you're starting off with 50 cents on the dollar. But, I don't know. I'd have to know more about what the options are. Because, if they're going to match the contributions, normally you'd want to match it unless the investment is going to be so poor that you're better off foregoing it. But I'd have to know more about it. But anyway, thanks for the call.
All right, thanks.
All right, Bob. Next up is Joe. Oh, no, is it Bob in Georgia next?
I'm here. It's Bob.
Hey, go ahead.
Peter, it's really good to talk to you. I'm really proud that I've got a chance to, and to tell you that I hope we can get some more statesmen to go into politics and to really care for our country. I had a couple of comments. I don't know if you have before or not, because this is the first time I've listened to your program. Just found it out, but I'm a little behind. But have you ever warned the public about how actually possessing gold, how dangerous it can be to let people know that you have it? Plus, the fact that, if you try to cash the stuff in, and you don't have some good connection, they try to give you 40 cents on the dollar. At least they do here at all the coin stores and places like that in Georgia. You really got to have a good connection, or you're going to lose if you try to possess gold. Now, the question that I have...
Well, you're obviously... Look, there's no reason to get 40 cents. If you have, gold coins, you got Maple Leafs or Cougarans, you're going to get spot or 1% above spot. If anybody's paying less than that, you're getting ripped off.
Well, that's what they try to do at all these coin shows and all of the... I haven't let them do that to me because I had my connections, and I was able to get Spot Plus. But the thing is, actually Spot, you know what I'm saying. But what I want to ask you about now is the gold stocks. Do you see them as... See, I don't really want to possess gold because I know in anarchy is about the only place you really could use that out here in your hands, unless you're really brave and got something to back it up, like a gun. And I don't even want to deal if anarchy breaks out by trying to use gold. I'd rather use a gun and just defend what I had to. And I don't know if that's going to come to that or not. But I just wanted to, if the gold stocks, I decided to move my money out of gold into the gold stocks, such as AUI and others, because I've seen them paying actually about, like gold was last year rose about 25%, just a rule of thumb, and the gold stocks, some of them were 100%. And I wonder if you see that that's a good place to put that gold, and if that might continue.
Put it where?
In the gold stocks, such as gold mining.
Yeah, look, I think gold stocks are still undervalued relative to gold. I think they're going higher. I have a lot of gold stocks myself. There's a lot of gold stocks we recommend to our clients. So, yeah, I think they're going higher. They're speculative. You're betting on the price of gold, but I think the price of gold is going higher. That's a bet that I'm making with my own money, and I think it's a bet that I'm going to win.
Well, like I say, I'm doing the same. But, Peter, it's great to talk to you, and I hope that you get in there and you can show a good example of what somebody that cares and actually wants to do their job can do. I think you can. I've not met too many people in my whole life that really gave me the what I get from you when I listen to you. I know that you really have seen something. It agrees with everything. It makes sense anyway. But thanks, and the best to you.
Thank you. Next up is Ellen in New Jersey.
Hello?
Hi.
Hi, I'm in New York, but I'll forgive you.
Oh. Okay, well...
I have two questions. One, I wanted to ask your opinion about a film called The Secret of Oz, because I was a little surprised to find you in that film. And my second...
Well, I'm not even sure what the film is. So.
You're not?
No.
Interesting. That's very interesting. Okay. You know Bill Still? Producer?
No.
No, you don't?
What is it, a documentary?
Yeah. Yeah, I think maybe you want to have Andrew go on a website called secretofoz.com and order the DVD, because you're in it.
I don't know. I mean, I've been interviewed for a lot of documentaries over the years. I forget the names of them, and I don't, I mean, so I'm sure somebody came by my office one day and recorded me. I just thought I've never seen the finished piece, so I don't really know what it's about.
Okay. How about the Money Masters? You familiar with that?
No.
Okay. How about the monetary reform movement?
I mean, I'm not particularly familiar, but what is there a point to your
All right, well
question?
then I'll just go on to my next question. I mean, I'm just real surprised because, as I said, they have a clip of you in The Secret of Oz, and so I thought you knew what it was.
No, and they might just have a clip of me that they picked off of YouTube. I don't even know if it's an interview I gave them or if it's something they just picked off, the public domain.
Interesting, and your name is on the DVD, on the outside of the DVD. Okay, so my next question in that regard, and I don't know if you're going to know the answer to this one either, is do you think that there's gold in Fort Knox, or do you think it's been moved?
Well, look, I mean, it should be there. I mean, I hope it's there. I mean, it would be a huge scandal if it wasn't there, and it would be a massive conspiracy. So the odds are it is there. I have a hard time believing that they could have, that gold could not be there, and they could have kept that quiet. So I'm sure it's there. Unfortunately, we don't have enough compared to all the money that we printed.
Right. Okay, well, thank you. Sorry for surprising you there. I just thought you knew about this DVD. Okay.
No, well, anyway, thanks for pointing it out.
Thanks. Bye-bye.
Bye. Next up is Bennett in Florida.
Hello, Peter.
Hey, Bennett, how are you?
Good. Yeah, I just want to see if what you think about this. I'm sure I'm not the only one to notice this, but the nickel, the 5-cent American nickel, just broke face value in its copper and nickel melt value. It's a little over 5 cents. Don't you think for the people who are too foolish to get their money out of U.S. Money, their savings rather, wouldn't it be worth the minuscule interest that they'd be giving up to just convert it all to nickels? And
yeah, well, you're better off because if you get the 1981 penny, that's copper, and there's still a lot of those circulating.
But the nickel, I'm talking about nickels. They currently still.
It's not hard to find pennies from 1981. There's a lot of them. I mean, so yeah, but sure, you're better off with nickels. I mean, I mentioned a couple of years ago, the metal content of the nickel exceeded the face value of the nickel. And yeah, I mean, although the government made it illegal to take nickels and pennies out of the country, I guess in any quantity, and it's illegal to melt them down. I mean, so they're trying to stop people from doing that. But yeah, certainly it makes more sense to put pennies and nickels in a jar than put dollar bills in the bank. That's for sure.
Well, I was just thinking because since they're still making them, it's you don't even have to hunt for them. You can just just get them exchanged. Just get change for it. And I would figure that you don't have to melt them. It would just be just like junk silver is now with 64 quarters and stuff. They wouldn't kind of Gerson's law kind of thing. It would just eventually
the metallic value of a nickel is going to be 10 cents, 15 cents, 20 cents. It might, who knows?
Okay.
But at some point the government's going to have to stop making them because they're not going to spend 20 cents to make a nickel. I mean, I guess they're not that stupid. I mean,
they probably get to 15 or so, and then someone will stop them.
Yeah, or they'll start making them out of plastic or something, or.
I'm sure they'll get it. 90% zinc until even that is cost more than 5 cents. But
yeah, all right. Well,
do you also think it would be a good idea? Because I assume that they would have to stop producing them. I mean, obviously, it's not going to be worth more than that until the day they stop producing them, because you could always just get them for 5 cents.
But the melt value, you can always melt them down, except it's illegal. But
I just mean more like a junk silver kind of an aspect where it's still worth more, but not as the face value, just as just like a silver dollar, that kind of thing. Do you think it'd be worth it to borrow money and use that as collateral? I don't even know if banks would do that or would laugh at me. But
I mean, my dad did that in. He went and he was storing, I think, $10,000 worth of silver coins in bags, and his friends were laughing at him because he's like, "Wow, you're not getting any interest," But I don't know if you want to borrow money and pay interest to just buy nickels and pennies. There's probably better investments that you can leverage up to own. But anyway, thanks for the call.
Thank you, Peter.
Bye. Next up is Sean in Maryland.
Hi, Peter.
Yes.
Hi, Peter.
Yes, I'm here.
Oh, hey, yeah, thanks for taking my call. I have two questions. I was hoping I could ask you one question and then follow up with a second one.
Mm-hmm.
The first one is I need a house, and I'm sitting on a considerable pile of cash in U.S. dollars, and I'm trying to decide if I should take the plunge and buy a house now or risk waiting until the market moves lower. But I'm conflicted about what I see as an apparent paradox between the impending devaluation of the dollar and a continuing decline in housing prices. On the one hand, it does seem that inflation or even possibly hyperinflation is on the way. As you say, this will result in higher interest rates, high unemployment, and even more foreclosures, which all should substantially depress the housing market and housing prices. But if the dollar collapses in a big way, and if if a loaf of bread costs $8,
yeah,
how can house prices fall in any meaningful way? I mean, a house is a tangible asset of the highest order and provides a critical and basic human need. So I'm having trouble thinking of a house really just keep dropping in value.
Well, they're not going to drop if we get massive inflation. Most housing prices will only fall in nominal, in real terms. They might actually rise in nominal terms. But you're talking about you're sitting on a pile of cash. How much cash are you talking about?
Oh, close to 200,000. I've been day trading essentially in GLD, and I've done well with that.
How expensive a house were you contemplating buying?
Not a fancy house. Something that I could pay. And what I'm hoping to do is wait for interest rates to go up, and then
give me a dollar
to depress the principal price, and then at that point a 300.
You're missing my. How much are you trying to spend on a house right now? If you bought a house.
Well, ideally, if I would like to buy approximately a $250,000 to $300,000 house today, but I'm hoping.
All right, so here, basically, what I'm saying, if we have a lot of inflation, let's say instead of taking that $200,000 and buying a house,
right?
You take that $200,000 and buy gold, all right?
Okay. Yeah.
And you keep renting your house,
right?
Let's say that we have hyperinflation, and the house does in fact go up in value. The $250,000 house goes up to $500,000. Okay.
Right.
But your $200,000 in gold is now worth $2 million. The idea is that you can still the house is still cheaper for you because you're paying for it with gold. In terms of gold, that house price will go down. And the worse inflation gets, the more house prices will fall in terms of gold or other assets for that matter. Right. So if you're thinking about a real estate purchase as from a monetary perspective, as is it going to be cheaper for me to buy a house today, or in 2 or 3 or 5 years, it's going to be cheaper in 2 years or 5 years if you have gold to pay for it, or if you have maybe foreign stocks or Swiss francs. But if you have U.S. dollars, if you're waiting to buy a house in U.S. dollars, then it will probably be more expensive. But why would you wait in U.S. dollars?
Well, yeah, I agree. But the only thing is, like I said, I've been taking my money in and out of GLD, and I've done well. I got out, just before the last correction here, but now it looks like it's going to start on another upward trend, and I'm thinking about going back into it again. But since this money is for a house, I just feel pretty uncomfortable about investing it in something that, at least in the short term, is pretty speculative. I do believe.
Well, why do you? I mean, where do you live now?
Well, I rent, and I have a very cheap rent too. So,
are you married? You live by yourself?
I live by myself. Yeah.
Well, why do you need a house?
Well, I would like to take advantage. Basically, what I'm thinking is that with the cheap money that's available today with these low interest rates, I'm wondering if the sweet spot is right about now, considering the cheap interest rates.
Well, that the only way to do that, then, don't put $200,000 down. Go get yourself a 3% down mortgage through the FHA and get your tax credit. See, that only works if you put very little money down. Then you're basically saying, look, I'm locking in a low payment, and when there's massive inflation, I got a 30-year fixed-rate mortgage. That makes sense. But if you're going to put a substantial down payment, then it doesn't make sense.
Right.
So if you can buy with nothing down or close to nothing down, yeah, do it. Why not? Get a 30-year fixed-rate mortgage, and by the time you make your last payment, the postage on the envelope will be more than the check inside.
Oh, geez, I hope it doesn't get that bad.
Yeah. Wait. thanks for your call. I gotta go because we spent a lot of time and I got a couple more callers.
Oh, okay.
But anyway,
thanks,
good luck.
I appreciate it. Thank you.
Bye-bye. Next up is Scott in Minnesota.
Hey, Peter.
Hi.
Hi. Two questions that are related. Can the U.S. pay off its debt legitimately if we cut spending to an extreme, or do we need inflation to pay it off?
Well, inflation doesn't count as paying it off. That's repudiating, in my opinion.
Well, true.
Look, I think that the debt is actually so large at this point that it's probably impossible to legitimately pay it off. So I think that we have to default either through inflation or actual default. And when I'm talking about the debts, it's not just the funded debts, but you're talking about all the unfunded liabilities. I mean, the U.S. government has committed to making payments to Americans for Social Security, for Medicare. These obligations, these commitments cannot be made. So there needs to be a default one way or another. Either we're going to print money and give people benefits that have very little value, or we're going to level with the public, we're going to level with our creditors and let them know that they're not going to get back everything that they expect.
So then how do we have a strong dollar policy? I agree with you in principle that that's exactly what we need, and but how do we have a strong dollar policy and have high interest rates? I mean, we would default if we have high interest rates and a strong dollar. How do we?
Well, that's what has to happen. I mean, we have to raise interest rates, but when interest rates go up, we can't make the payments on our debts. So we have to be able to raise interest rates, but we have to restructure our debt at the same time. We might tell people, look, we're raising interest rates, but we're not going to be able to pay you. If we're paying now, 3% on debt, and we owe $100,000, we might say, look, now rates are 8%, 9%, but we're going to have to knock the principal down, just like what the government is saying for the homeowners, principal reductions. We can't pay the full debt. We have simply borrowed too much money. We have to face up to that reality. If we try to maintain artificially low interest rates in perpetuity, because that's the only way we can keep this thing together, then we're going to collapse the dollar. The dollar is going to be destroyed. We don't want that. We have to maintain value in our currency. Unfortunately, the dollar is going to lose value based on all the problems, all the mistakes we've already made. But we can't compound those mistakes and drive the dollar even further into the ground.
Yep, I agree 100%. But I mean, are the Chinese going to? I mean, what are they going to say when we say, yeah, we don't want to pay all our debt, we're going to have high interest rates? I mean, what are they going to say?
Well, look, I mean, for them, they're better off if we give them less money of value than pay them back in full with money of no value. I mean, we're just fooling them. I don't even know if the Chinese believe that they're going to get paid back. At least that the people that have any sense. It is impossible. Yep. How are we going to pay the Chinese back?
Yeah, right. Now,
how are we going to? We have to start running trade surpluses. How are we going to do that? We have to start saving money. How are we going to do that? I mean, we're not going to do any policies in place.
Yeah, no, I agree. I mean, that answers my question. It seems like almost a hostile thing to tell the people you owe, you're not going to pay them back. So I guess that's my concern.
Yeah, well, we can't pay them back, and that's just a reality.
So you think we're better off? We're better off with that policy than we are with inflation, as far as with being in foreign relations with these countries.
Look, we're much better off legitimately confronting these problems than to continue to create inflation. We're better off with a restructuring, some type of default where we pay off, a meaningful percentage of our debt. But we have to reform the policies at the government level, at the Fed and in Congress, that have led us to a condition where we're so highly indebted in the first place. We have to change that. We have to allow this economy to experience real growth, because what we've experienced recently has not been growth. By and large, it's been consumption. It's been consumption financed by debt, and we can't keep following in that path.
Yeah, no, I'm with you. That makes sense.
All right, well, thanks for the call.
Thank you.
The last caller of the night is Greg in New York. Go ahead, Greg.
Hello. I was just wondering what you thought of palladium, like palladium maple leaf versus gold and silver.
Well, I mean, I think those metals, the palladium and platinum, I think those metals are going higher. So, as are other base metals. So, I mean, I don't own any palladium personally. I own some palladium stock. I own some platinum, the physical platinum. I think they're going higher. I mean, I think, nickel and zinc and lead are going to go higher, and, corn and wheat and soybeans and oil and natural gas, and the price of everything is going to go down because the value of our money, the price of everything is going to go up because the value of our money is going down.
Yeah. Lately, it seems like it's just been kind of, I don't know, 20%, 25% the last couple of weeks.
What's 25%?
Maybe 20%. It went up from like 360 to 420 right now. Palladium.
Palladium?
Yeah. I didn't know. If that was. Pardon me?
It's still pretty cheap. Palladium got to over $1,000 an ounce, I think, at one point, not too long ago.
I didn't know if you thought that might kind of go up at the same rate as gold, or if it would.
I don't know. I don't know. You're saying which metal could do the best. I don't know. I have a feeling. I like silver. I think silver could make a pretty big move here. Sure. But I think they're all going to go up. Just trying to figure out which one goes up the most. I don't know for sure.
Okay. Just wondering. Thanks.
Yeah.
Yep.
All right. Well, thanks for the call.
Okay.
All right. I guess we have time for one more caller. It looks like I could take the last call. Are you there? Hello? They just queued me up and said if there was any other callers. I guess there's no one on the line. All right. Anyway, that's fine. Well, it's I guess I got about 8 minutes left, and there was no callers. But anyway, just to get back to what's been going on in the global economy and in the market, there still is this belief out there, and I know we've got the jobs numbers coming out on Friday, and everybody is always, highly anticipating these jobs numbers to see if jobs are being created, if the economy is recovering, if the stimulus is working. And, the stimulus can't work. The fact of the matter is, because the government is stimulating, the economy cannot recover. Now, we can generate some more spending because we're able to go deeper into debt, and to the untrained eye, that seems like it's economic growth. I keep hearing, well, we just got to get the government to get it started. The stimulus is like going to, be the kindling on the fire. We'll just get the government to get everybody to spend, and then we'll be able to take the stimulus away, and it's going to spend. Kind of like, we're pushing this car, and once the car gets started, well, it's going to keep on going. Well, the only reason that we're spending is because of the stimulus. And the minute the stimulus goes away, the spending goes away. It's impossible. It can't keep going on its own because everybody is broke. And the government doesn't want that reality to set in. I was when I was on this Kudlow show today, and all the candidates were there. Now, one thing that Linda McMahon said was that she's talking to all these businesses, and they can't borrow money, and she wants them to be able to borrow money. Well, the reason they can't borrow the money is because it's not there. There is no money. The savings aren't there. And what savings are there? Well, the government's spending it. And if businesses are going to get credit, people have to save money. Well, we can't save money if we're spending it. So the only way to really have a meaningful economic recovery and jobs growth is if the government stops spending, if individuals stop spending. And that's the opposite of what's happening right now. That's the opposite of what the stimulus is trying to encourage. They're encouraging us to do all the things that prevent the economy from recovering. And so when they get this job number out on Friday, and maybe it's not as bad as some of the jobs numbers in the past, but there is not going to be any kind of meaningful reduction in the rate of unemployment. There isn't going to be any meaningful job growth. There might not be any job growth at all, because that's not going to happen. And to the extent that Americans find themselves employed, they're going to be employed in non-productive ways. They're going to be working in the government, or they're going to be working at jobs that are only here because of government stimulus money, And those jobs are not actually adding any real productivity to the U.S. economy, which means the value of the wages that people are going to earn in these non-productive jobs are going to continue to diminish. And in the final analysis, even if more Americans find themselves employed, they're not going to have the benefits of employment because they're not going to be able to buy very much with their paychecks. In which case, what good is having a job? I mean, if you're not earning money that can buy you anything, why bother? And that's what people are going to find out. It's not the jobs that they want, it's the purchasing power. And purchasing power doesn't come from government spending. It doesn't come from money printing. It comes from real production. And production comes from savings. It comes from capital investment. And you don't get capital investment and you don't get savings with 0% interest rates and high taxes and all sorts of government regulation. And unfortunately, that's what we've got. This healthcare thing, they're getting ready to pass. We still haven't got the finalized version of between the House and the Senate. But either way, I'm sure it's going to be a pretty bad, bad bill, however it comes out of that conference committee. And that's just going to add more problems to our economy that is already suffering under the weight of too much regulation and too much government. And, and getting back to the Senate race, a guy like Blumenthal, he never saw a problem that he didn't think the government could cure with regulation. And if there's a business making a profit, well, the government needs to interfere with that. And that's not what we want. We need to change that attitude. We need to understand why the country is in so much trouble and what we need to do differently. Anyway, that's it for today. Again, don't forget to visit the Schiff for Senate website at SchiffforSenate.com. It's a new year. We're trying to raise some new money. It's going to be a new dynamic in this race. So if you haven't donated, you want to go to SchiffforSenate.com and make a donation. You want to sign up to volunteer to make some calls. My name is still not widely known in Connecticut, but I'm going to change that this quarter. We're planning on doing a lot of direct mail. We're going to do some advertising. We're going to do the things that I need to do to get my message out there and differentiate myself from my opponents. Although, as Larry Kudlow pointed out today, a lot of my opponents are starting to sound like me. They're kind of adopting some of the rhetoric I'm saying, but I don't know that they really believe what they're saying. They're trying to appeal to a popular backlash now against big government, and so they're saying all these things. But of course, when Rob Simmons was in this Congress, he had 6 years to make a difference, and he didn't. And I think now they're just saying what they think they need to say to try to tap into this, this populist type of revolt against big government, which I think is well deserved and long overdue. But I'm not convinced that either one of my opponents has any intention on following through with anything. Neither do any. We've sent a lot of Republicans to Congress over the years, and they've just went along with the game. They've grown government. They've increased spending. They've increased regulation. They do all the wrong things, even though they sometimes say the right things. But anyway, that's not why I'm running. I'm going to say the right things, and I'm going to do the right things, and that's my commitment. Anyway, that's it for everybody else. Don't forget, if you have any more questions specifically about investing, about your stocks, call your broker at Euro Pacific Capital at 800-727-7922. Remember, there's risk in foreign investing, so talk to your brokers, understand the risks in precious metals, the risks in stocks, the risks in foreign bonds. And if you haven't picked up, make sure you get a copy of Crash Proof 2.0, How to Profit from This Economic Collapse, because believe me, it ain't over. Thanks, everybody.